Ladies and gentlemen, thank you for joining APF Holdings Investor Webinar. Today, our hosts are Jurijs Adamovics, Group Founder, the largest shareholder and Chairman of the Management Board, and Uldis Iltners, the Chairman of the Supervisory Board. The webinar will consist of two parts. First, we will be provided with an overview of company's growth story, business model, key market trends, and main terms of the IPO. Then we will continue with the live Q&A session. Please join the discussion by adding your questions in the Q&A section underneath the presentation. The recording of the webinar will be available shortly after the call. I am now handing over to the presenters.
Dear participants, warm welcome to APF Holdings IPO webinar. I am Uldis Iltners, the Chairman of Supervisory Board, and it's a significant moment for me today, as it is my second experience with an initial public offering. And what can I say? Since our successful IPO of Mother Cosmetics in 2017, my belief in the stock exchange as a valuable platform for middle-sized companies to attract growth capital remains unchanged. And today we will present the APF Holdings growth story, and we invite you to explore the opportunities to invest in a dynamic Latvian egg production company and become a shareholder of the company. And for more detailed overview, I will hand it over to the Chairman of Management Board and business partner, Jurijs Adamovics.
Uldis, thank you very much for your introduction. Good day, ladies and gentlemen, dear participants of our webinar. So let's begin our IPO narrative presentation, which is essentially about two key metrics. It's about the growth in our production output by 60% by year 2025, and quadruple increase in our profitability. And over the following 35-40 minutes, we'll try to explain to you how we're going to achieve that, and most importantly, why we believe this is achievable and doable. So APF Holdings is having its roots in a northeast part of Latvia, in Alūksne region, and our key facility is located just 15 kilometers from Estonian borders. So actually, we're meeting Estonian investors. We tend to say that we are almost Estonian company, because indeed we are located just on the border. The group or the poultry factory itself has its deep roots going back to 1961. Actually, just 2 years ago, we have celebrated 60 years anniversary since foundation of the Alūksne poultry farm. So we have found a very interesting statistical data in the local archives. But in a nutshell, basically what our existing management team inherited back in 2016 was a pretty much abundant Soviet-era infrastructure with one half completed modernization project. So in fact, APF Group has actually gone through a quite exciting transformation journey, which bear its fruits, and today we are proud to share that we are third largest egg producer in the Baltics in terms of the output, and also in terms of the revenue that we generate. If we would briefly look back at the history, and now on the screen you can see how the egg production looked back 60 years ago as compared to the modern facility today. You will see that it's quite an enormous change. Just to give you some flavor also in terms of what does it mean in terms of productivity, according to the archives that we have recovered from local municipality, back in the early 60s of last century, the factory employed around 50 employees. And the annual production output was between 500,000 to 3 million eggs per annum. Now, today, our factory employs 54 people, and we produce 115 million eggs per annum. So we're speaking of more than 30-fold increase in productivity, which is amazing, how the agriculture industry have evolved over the last decade. We're actually particularly proud about the fact that we take a very deep care about modernization and efficiency. And in fact, the last two barns that we have constructed and launched in the last years, they can be pretty much managed by your smartphone application, and they require minimal human intervention, so as the contact with animals is kept to the absolute minimum. APF at a glance, let me walk you through some of the key metrics. In terms of the production capacity, as I mentioned, we can produce up to 115 million eggs per year with our current installed capacity. And that can be achieved with a flock size of 415,000 laying hens. Today, we have 3 barns in place, 2 of which are cage-free egg production method. We have our own sorting facility. We have our own feed mill, and we're actually, as we speak, are completing installation of a solar energy park and related infrastructure. If we look at the key financial metrics, last year we have reported 1.2 million euros in revenue. The EBITDA for last year was 2.1 million euros, and EBITDA margin at the group level was 18.8%. Now, year 2023 was in fact a bit even more successful. We have generated 7 million euro in revenues in the first 6 months. And in terms of our profitability, we have actually earned almost entire last year's EBITDA in the first 6 months of this year. So this is good news for us and also for our prospective investors. Very short overview of our product portfolio. You know, in egg business, your product portfolio is obviously a rather simplified. What we offer to the clients is pretty much what is in high demand. We offer enriched cage egg, which in the Baltics continues to be the most demanded product. We offer barn reared eggs, which constitutes 2/3 of our production capacity. And we also offer a free range egg product to our client, which we source from local farmers, which are certified by ourselves. Still in Latvia and also in the Baltics, free range and bio eggs constitute less than 2% of the overall consumption. So what we see is that this product is sort of still not justifying industrial scale business model, but still, as demand exists, we do offer this for our clients. We sell our product as a branded egg. We have our own trademarks, which are available in supermarkets across the Baltic states. Our eggs can be bought under the brand APF, under the brand Oluksne, and a few months ago we actually also introduced Chigen packaged eggs. And we also do private label programs for large international chains. So rest assured, if you would buy a private label egg, say Rimi or other international brand, there is very high probability that it was produced at our Oluksne poultry farm. At APF, we also take a very responsible approach to innovation, and we are extremely proud that this year we have introduced a very innovative product to the Baltic market, which is egg protein smoothie, which is currently available in 3 flavors: mango, apple, and orange. And it's currently can be bought in Rimi, Stockmann, and Narvesen groceries and shops. Also, this year we were definitely first FCMG sector company in the Baltics that try to merge a real sector with a virtual sector. We have introduced a chip game packaging for our product, on which one can also, using QR code, download a mobile game called the chip game from the App Store or Google Play, and entertain herself or himself in an educational and funny game, which is of educational nature and pretty much shows how the egg is produced and what are the products, food products, which can be produced using egg. And the idea there was to test this in the Baltic market, and if we see if that mobile gaming approach is successful in the Baltics, then we will try to offer this packaging in other export markets as well. Now on the screen, you can see a photo picture of our current facilities. The three key buildings that we have in our infrastructure are the laying hen barns. The one further on the picture is the first barn, which is classified as enriched cage. The other two barns are the newest barn that we have built, which are, as I said, very modern and can be run using smartphone applications, and the degree of automation is extremely high. We are particularly proud with the fact that not only we are very diligent in terms of biosecurity protocols and production efficiency, but we also try to do things beautifully and elegantly. And we, to our deep surprise, but still we are quite honored about it, the Latvian Union of Architects has given us a bronze award as the third best architecturally designed building in the industrial building segment. So that to some extent proves that farmers can also build some beautiful buildings, which was very pleasant surprise for us. A short introduction of our management team. The management board of APF Holdings is comprised of seasoned executives with very solid track records, predominantly in finance and banking industry. But now over the last 6-7 years, we're all focused on poultry. Our CFO, Michael Skeziks, is a seasoned banker and finance professional. Before joining APF, was a portfolio director in asset management companies. Our group CEO, Hermanis, is also a seasoned banker. Had top managerial positions in various Scandinavian and local groups. But since 2016 is actually acting as a CEO of the group and is in charge of today production and commercial aspects of running APF Group. Myself, I'm also a banking professional, predominantly spent most of my career in the financial industry. I'm also an entrepreneur. I'm also a non-executive chairman of Industra Bank, and a SME-focused bank here in Latvia, of which I'm also a shareholder. But production and poultry business in particular today takes most of my time. And not only I'm engaged to APF Group, but I'm also paying my dues in terms of additional social responsibilities. For the last 2 years, I'm also chairman of the Council of the Latvian Poultry Association. So as APF Group, we also devote substantial time of our resources for policy dialogue and helping other farmers to do a proper policy dialogue with the public sector. We are particularly proud of our supervisory board, which is comprised of very high-profile professionals of international standing. Uldis Iltners, who's sitting next to me, is a very well-known businessman in Latvia, co-founder of Madara Cosmetic, which is, as you all know, is Nasdaq listed, and as of today is probably the most successful IPO so far, according to historic performance. Uldis is of great help to our team navigating through current process and also in terms of strategic guidance when it comes to optimizing production efficiencies. Deputy chairman of the supervisory board is Eva Berlaus, who is also a very seasoned business professional here in Latvia and is very well known in the Baltics as a managing partner of Sorainen Law Offices. Miguel Jordao is a London-based investment banker with very interesting background in agri-tech and engaged in various agri-tech startups, predominantly in London and Oxford based. And his guidance is a great help to the group as well. Alexander Sodomovich is a professor of University Agriculture, long-term director of Agrobiotechnology Institute, and one of the most prominent researchers of feed production questions in the Baltics. Now on the screen, we see a legal structure of the group. The issuer in our case is a mother company of the group, which is a joint stock company APF Holdings. APF Holdings has 5 subsidiaries in which APF Holdings owns 100% of the equity. The key asset in the group is Aluksne Putnuferma, which is our main operational company, which also holds all of the real estate, land, buildings, equipment on its balance sheet. The second company in the group is called Oluksne, which essentially acts as a facility operator, employs all key personnel, and provides facility management services to the Aluksne Putnuferma. The third company in the group is APF Trading. APF Trading, the business is described in its name, is essentially a trading house of our group. APF Trading has all of the contracts with retail partners and basically sells all of the products produced by the factory. Our next subsidiary is a company called Preilių Putni, that is located in Preilių municipality, which is 150 kilometers from Aluksne. And this is our strategic hotspot, because what we're doing in Preilių, we already have 2 hen houses constructed there with the support of local municipality and European Union structural funds. So we have 2 buildings that are commissioned, and we plan to install a hen or young bird, young chick rearing equipment there. So basically young pullets will be bred in Preilių for our own needs. APF Energy, last but not least, is also a fully owned subsidiary of the group. APF Energy does development of 2 greenfield projects. One is a biomethane production plant, and the other one is granulated mineral fertilizer plant, of which I will tell a bit more in the following slides. So why the IPO? What exactly is it that we want to achieve by going public? As opposed to perhaps some other most recent IPOs, I think we can be distinguished that we have a very specific plans in place. We have an investment program that is very time bound and is very precise. What we're going to do with the help of IPO is we're gonna increase our existing 3 barns to 5. So we're gonna construct 2 more barns. And that in turn would help us to increase the flock size from 415,000 to 665,000 birds. This in turn would help us to increase production output from 115 million eggs per year to 180 million eggs per year. And as I mentioned, today we are actually buying all the young pullets, young hens from external providers. The plan is sort of to eliminate that part of the chain and be in a position to produce young birds ourselves. And so the part of the funding will go to installation of pullet rearing equipment in the municipality of Preilių. Yes, now on the screen you see basically the picture of our existing facility, a real view from the top. We have 32 hectares of land in Aluksne area, colored in green. Sorry, I'll sip some water. What you see colored in the green are the new buildings that we plan to construct. Under number 8, these are 2 new barns, 4th and 5th barn, that we plan to construct. And with the green color labeled 9, we have a expansion of sorting and egg production facility. And as you may appreciate, 32 hectares of land actually provides for quite a good opportunity for further expansion. We of course have a 5-year plan in place for additional increase in our production output. What we're doing now in Alūksne, we're finalizing environmental impact assessment procedures to be able for the increase of our flock to 2 million hens in Alūksne. So we have, of course, a long-term program in place, which will be implemented in due course over the following years. Now, if we come back to the post-IPO expansion program, and obviously one of the key sections of the issue prospectus is use of proceeds. That's where most of the investors would look into. And here we are very happy to say that we have a very detailed breakdown. We gonna need 5.6 million for each of the 2 new barns, and this figure does include construction costs, purchase of new equipment, and installation of this new equipment. 1.7 million will be used for purchase and installation of pullet rearing equipment. 2.9 million will be used for the expansion of sorting facility, and 800,000 euros will be used for the egg production equipment. So all in all, the capex estimate is rounded to 17 million euros, of which 7 million we expect to raise from the IPO, and the remainder will be provided by the commercial banks. Now, the good news is that we already have on the table offers from 3 leading commercial banks in Latvia, and our plan is to formally finalize it in the weeks to come. And I think this is one of sort of the key distinguishing factors of our IPO, if compared to perhaps some others. So we're not a startup, we're an established company. We have a very exact time-bound investment program in place. And the reason why we are in the position is sort of to have such a detailed use of proceeds in place, because we as APF are also benefiting from the support of Ministry of Agriculture, EU-funded programs, and as a recipient of public funds, of course, you are obliged to follow a very stringent public procurement process. And the good news is we have entirely completed that. So all the tendering procurement has been done, all the prices are fixed, contracts are signed, and we pretty much, within a week or 2 after the IPO, we can literally dig the shovel into the ground and start construction, which I think is a very good news for our investors. So the next question is, why do we believe that we will be in a position to sell off such a substantially increased amount of product? That's a question we receive very often, because 60% increase in production output does sound a lot. So over the next few slides, I will attempt to address that question. And by doing so, I want to start with giving a brief macro background about the industry. The good news is that the poultry sector as such is actually very well placed, because historically egg, and also in fact chicken meat as well, was, is, and is very likely to remain in the long run a most affordable source of animal protein. And there is a consensus view among investment banks, and in our case we use Rabobank, forecasting that the consumption and demand of egg will grow by over 25% in the next decade. Now, another important factor is that eggs are actually one of the eggs on par with chicken meat are the most efficient and also affordable source of animal protein. In our industry, we quite often use such term as a feed conversion rate. And here it is important to highlight that in agri-industry, especially when animal feedstock is involved, your feed production costs might constitute 50 to 60% of your costs. So that is a very substantial portion. That's why also feed conversion rate is critical for our industry. And now, if one would try to interpret what you currently see on the screen, so let's take, for example, 1 kilogram of beef and 1 kilogram of egg mass. So what this diagram is telling us, that in order to produce 1 kilogram of egg, you actually need 4 times less feed than to say produce 1 kilogram of beef. And this actually is putting poultry industry in a very advantageous position. And in fact, it also kind of hints to us why the poultry industry is among those very few industries who are not getting direct subsidies from the governments, because they are deemed to be self-sufficient and profitable on its own merits without direct subsidies. The slide that is now on the screen is actually perhaps the most important slide that helps to understand why we are so hopeful that we'll have no problems whatsoever in terms of selling increased output. What our team has done, we have basically looked at the egg producers landscape in the Baltics. We have digged into Eurostat statistics. We have used extensively Nelson IQ analytics in terms of the distribution and the sale of the eggs, and we have looked at the installation plans for new equipment. Now, I would assume that most of you, as egg consumers, have noticed that there is this major public movement fueled by NGOs and also various retailers, and in fact, all international retailers operating in the Baltics have announced by the year 25 they will not be offering cage-reared egg on the shelves. On the other side, you have this harsh reality that today 70 to 80% of the production infrastructure that is installed in the Baltics is actually cage egg. And our calculations suggest that by the year 2025, Baltic market is going to have 363 million shortage of cage-free egg demand, which is a massive gap. On the flip side, with the 2 new barns that APF is going to introduce to the market, we are going to take only 73 million of that shortage. So which is actually only 1/5. So this, pretty much sort of contradicts the argument that 60% increase in production capacity might sound a lot, but then if you look at this sort of structural change in the consumption pattern and the push from NGOs, retailers, and public sector for increased animal welfare, so that actually puts APF in a very advantageous position. And also, it's very important to underline, how the European-wide egg industry landscape looks. Europe historically was, still is, and is very likely to remain in the long run a net importer of eggs. Now, you have such big countries like Germany, UK, Italy being net egg importers. And now in our industry, quite often for macro analytical purposes, we use such term as the ratio of a nation's sufficiency in terms of supplying itself with eggs. And the way you measure that, you basically take the country flock site and its ratio towards the population. So if its ratio is below 1, that would imply that the country is producing less eggs that it requires for consumption, under the assumption that we need 1 egg per 1 person living in the country. And if you would look at such countries like UK or Italy, in this country this ratio is around 0.6, 0.7. So we have these massive European markets severely undersupplied and importing most of it from third countries. The other good consideration for us as a producer is that, similar to the Baltics, older European countries, old Europe, is also lagging behind in terms of transitioning from enriched cage to a higher animal welfare standard production methods. Also, if we look at the old Europe, you would still have 50 to 60% of the infrastructure being cage or enriched cage. And now this again also sort of underlines that the strategy that we're taking is a prudent one, and we're pretty much on the edge of structural changes in the industry. Now what you see on the graph is pretty much a sort of digital or numerical confirmation of the macro picture I was trying to draw, basically showing in absolute numbers which countries are the largest importers and the exporters of eggs in Europe. The next obvious question which might come to investors' mind is how much shareholder value is going to be created within the IPO. And in order to answer to this critical question, I also want to say a few words about what we have accomplished so far. I think it's fair to claim that APF now is a established egg producer, and it took us 6 years to come at the point where we are now. And we're very happy to share that, you know, as I said at the beginning, today we're third largest egg producer. But it's actually we kind of learned it hard way by doing to understand that in our industry you need to manage your fixed costs very prudently. What happens in our industry is the chicken flock production cycle, you know, due to biological nature of your key assets, is limited. When we speak of laying hens, the production cycle is between 15 to 18 months. And what we have is that at the end of the cycle, you will have to liquidate the flock, wash, disinfect, wash again the barn, then put young birds in, which basically leaves you in a situation where 2 to 3 months you are basically still having a very large portion of a fixed cost, but you don't have any incoming cash flow. And the reason to overcome that is to have, you know, multiple barns, so that you can build a very prudent cyclogram, and over the calendar year you're in a position to guarantee stable production output to your clients, retail chains. And luckily we achieved that in year 2021 when we commissioned our latest third barn. And now we're in position to sort of have this balanced cyclogram and offer a stable, steady amount of product to our customer. What is also important to understand that in the course of previous investment phases, we have also invested massively in such infrastructure assets as a feed mill. Today we have a feed mill capable of producing 4 tons of animal feed per hour, which is sufficient to supply all 5 barns. The capacity of our sorting machines, which is also a very expensive, sophisticated machinery, is to process or sort 90,000 eggs per hour, which is also sufficient for the 5 barns. So what we'll need to put our money into is just to increase the overall area for storage purposes. And all in all, sort of this implies that with every additional million of eggs produced, due to the economies of scale, our margins will improve. In fact, our team has done a very detailed calculation, which proves that the production cost of 1 egg in barn 4 and 5 will be up to 14% lower than in our previous barns. And this is due to the economies of scale and large fixed investments that we have done in the previous investment phases. Another very important contributor to improved profitability is the product mix. You know, by having 5 barns, we'll have only one of the barns that is doing enriched cage egg. So our product mix will change considerably. It's no secret, you all as egg consumers know, and I'm sure have observed it on the shelves of supermarkets, that cage-free eggs are sold at the premium. And we also, as a producer, are going to benefit of that, because we're going to produce a higher margin product and we'll be selling that at a larger premium. So the combination of these factors is actually contributing a very substantially to improved margins and profitability of APF in the 2 years to come. Now on the screen, you have statistics of our production output. Yeah, as I've said, in year 2021, we have completed installation of our third barn, but it was not yet populated with a new flock, hence the decrease in production output. And year 2022 was the first year where the company actually at last had all 3 barns operational and was in position to offer a stable output to our clients. This year the production amount will be quite similar. We'll have minor increase in 2024 due to improvements in cyclogram, and then by the end of 2024 we expect to commission 2 new barns. And year 2025 is going to be the first year where all 5 barns are operational, and we will be in the market with our full increased capacity. This will, of course, translate into quite substantial increase in revenue. So we will go from 11.2 million in 2022 up to 25, almost 26 million in year 2025. And this, of course, is going to translate into a substantial increase in our EBITDA from 2.1 million last year or 4 million in 2023 up to 8.5 million EBITDA for the year 2025. The IPO offer, perhaps one of the key parts of the presentation. The price per share is determined at 6.85 euros per share. We deliberately try to make the price very affordable because we very much welcome not only institutional but of course retail investors. And as a company that is present in FCMG sector with a known FCMG brand portfolio, we of course do expect that our loyal clients will also become our shareholders. Due to that, we have also not put any artificial caps in terms of minimal amount of investment. So any retail investors willing and able to buy 1 share can become our shareholder, and we encourage all retail investors to do so. So the subscription period is already open. It's gonna last until Monday, October 30th. The subscription will close on that Monday at 3:30 p.m. We're gonna offer just below 1.1 million new shares to the market. So we're making a new issue. That share issue, if sold entirely, is going to represent 19.4% of company stock, which judging by the experience of previous issues should generate just enough depth and liquidity in the market to be interesting for investors. So we aim to raise 7 million euros. The passporting of the issue is done and approved by the regulator for all 3 Baltic states. So any investor residing in Latvia, Estonia, Lithuania, using their internet bank applications, web browser can subscribe for our shares. When the listing is when the subscription will be completed, our shares will be traded at the Riga First North list, and the first date of trading is expected to be 3rd of November. The dividend policy is, of course, a very important consideration. That's a question, of course, that we receive very often from prospective investors. Now, I'm happy to share that the shareholder meeting, we have approved a dividend policy, which envisages that up to 50% of the dividends will be, of the net profit will be distributed to the shareholders starting year 2026. Now, it's important to emphasize, and you obviously noticed it from previous slides, in the next 2 years, the company will be focused on executing current investment program. So all the free cash flow will be devoted to that. Starting year 2026, a portion of net profits for 2025, up to 50%, can be distributed. What we always emphasize very honestly, APF Group is not a dividend story. It's obviously a growth story, and the company is willing to grow and have a very substantial presence in the markets, both domestically and in the region. Few words about our approach to ESG, as is characteristic to all our industry companies. Our key byproduct is animal or chicken manure, of which we basically, if we look at our production capacity today, we already produce up to 50%. Up to 15 tons of chicken manure daily, which is a very substantial amount of waste to manage. So far, we have been very successful in selling it to neighboring biogas plants and local farmers for fertilizer purposes. But obviously, as we grow, we need to have our own sustainable solution. And that's why our daughter company, APF Energy, is developing these two greenfield projects. One is biomethane plant, and the other one is being granulated mineral fertilizer plant. Now, these projects are being developed by a dedicated team. We have purchased land for that purpose, which is located just behind the factory. So as we minimize environmental impact for transporting the manure to the biogas plant. The good news is that basically two things. One, green energy, of course, as you all know, is very hot topic today. We actually been approached and have entered into LOIs, letters of intent, with internationally renowned trading companies that are willing to cooperate with us on long-term basis and take off all of the production output. So now engineering and design is ongoing for these two projects. And it's also important to underline that for us, it's not kind of a venture capital kind of investment. This is a new industry standard, if you like. You have various companies like ourselves doing that. It's installing similar capacities, and it has proven to be a credible and financially rewarding business up to date. And also for us, this is an integral part of our zero waste mentality. So we are very serious about implementing this project in the following 2 to 3 years. Now, what is very critical to emphasize, we have agreed with our consultants that because this is a greenfield project, and despite substantial resources committed, and despite the fact that we have purchased land for this, we have agreed that this project is given a zero price tag in our IPO process. And this, in fact, can sort of provide a additional upside potential for our investors. But I will repeat that we priced it at zero in our valuation. No valuation whatsoever is attached to this project, so it can indeed provide a interesting future upside for our incoming shareholders. So ESG is something we take very seriously, and that's part of our DNA. A couple of years ago, we have approved with the management board decision zero waste mentality policy. It's introduced in every part of the production cycle, and I would actually want to pass the floor here to Uldis and to share his thoughts on our ESG approach.
Yeah, it's important to emphasize that this is an ESG story. Personally, sustainability and responsible business practices are of great importance to me, and yeah, this was one of crucial factors when deciding to join the company. The company has published its first ESG report of 2022 recently, and there are set the ESG strategy. All the elements which are important for the company, and which company will follow and further improve. What we see is that already at the moment company is above average, above industry average in terms of sustainability, and there is a very good potential to become a leader, an industry leader in the sustainability arena. And the management board and also the supervisory board will have a very close focus to ESG activities, trying to improve them further.
Yes, and the last slide we wanted to share with dear participants of the webinar is pretty much a invitation to become part of a solid established food production company with we believe a very sound track record in delivering good quality product, and having a very good market share of the market, with very specific town-bound development plans, and with very clear growth KPIs. And we are obviously a company that does take ESG very seriously, not only in our words but in actions. So having said that, let me conclude here, and we'll open the floor for questions.
Thank you for the presentation. Let's continue with the Q&A session. Participants, to join the discussion, please type your question in the Q&A box that you see beneath the presentation. The first question that we have received: what is the return on capital employed for the last 4 quarters and last 4 years?
Let me start answer to this question by saying that I would assume that we are somehow bound to the 3-year data that we disclose in the prospectus. So if I'm not mistaken, we can speak only of the last 3 years as the prospectus directive European-wide prescribes. So for the last 3 years, the data are disclosed in the prospectus, and for those periods, the return on capital employed is for the year 25, for year 2021 it was 7%. For year 2022 it was around 10%. First half of 2023 was 23%, and 12 months rolling forecast for 23 is 25%.
Thank you. How do you see other markets in the European Union, such as Poland, Estonia, Lithuania, and possibilities there?
Absolutely, these are markets that are of particular interest for APF Group. In fact, Baltic markets already today we see as our core markets. So when we actually discuss internally for management planning purposes, when we discuss our sales plans, we actually treat Baltics as a domestic market, because no secret, our key clients are large international chains. And for example, when we supply our goods to, say, Rimi distribution center, most often we don't know, is that particular egg pallet going to end up somewhere in Kaunas, Tartu, or Liepāja. We don't know that. So Baltic is already a domestic market. We also see a very good additional potential in Estonia, because what we see that there is in a way a lack of Estonian producers willing to transform into the improved animal welfare standard infrastructure, but we see a very clear demand from Estonian retailers, so we will be more than happy to pick up on that demand and capitalize on it. Lithuania is a bit different because Lithuania is a a very concentrated market, although we are present through the international chains who sell our product. But still, Lithuania is one of those very few European countries which are self-sufficient and produce more eggs than they consume. And in fact, second largest egg producer in the Baltics is located in Lithuania. But as I've said, we are present in Lithuania via international chains. Now, Poland is a very interesting market for us. Polish market is big. It's not far. It's 35 or 37 million, if not mistaken, population. So it's a big market. And statistically, we always see that the price for egg for the Polish market was always higher than in the Baltics. So this is a market we obviously look at. The problem there is, because the country is so big, you actually need to have a very substantial increase in production capacity in order to be able to sign a long-term agreement with a Polish retailer. Because even today, and even with 5 barns, we'll have just sufficient capacity to satisfy demands of our strategic partners today. So to penetrate Polish market, we would probably need to wait for the subsequent investment phases, because I doubt that we will have sufficient amount of product to benefit from that opportunities that exist today in the Polish markets.
Thank you. What is the life cycle of hens? What happens after it ends?
Yes, as I've said, one of our key assets is live animal stock. And as any animal, the age and the production capacity diminishes with age. The production cycle is as follows. You have sort of incubation birds, and then what happens is that poultry rearing companies buy that one day old chicks, and they would keep them until 14, 15 age of weeks of age. What happens then is that then companies like APF would buy this young flock and bring it to the farm and put them in the barn. And basically, then from week sort of 15, 16 to 20, 21, there is adaptation period, and the new flock sort of gradually starts to rear eggs. The production cycle, or the length of production cycle, now there are sort of two probably terms one needs to distinguish. There is a biological age of the chicken. Birds can live up to 10 years, right? And there is a useful production life cycle of the birds. I don't want to sound too cynical here, but we're in production business, and it is what it is. And if we speak of the production cycle, then it is depending on the brand of the flock, the chicken brand supplier. You are normally speaking of 70 to 90 weeks. After that, economically, it's just not feasible to keep the flock, and then you would liquidate it. In our case, liquidating means selling the entire flock that is populated in one barn to the meat processing factory. So we don't have a slaughterhouse in Alūksne. We don't have that infrastructure because that's an entirely new business. So what happens is that at the end of production cycle, we basically are selling the entire flocks to the meat processing factories.
Thank you. Talking about the IPO share price, how was the share price of 6.81 euro set?
The share price was, of course, set as a result of numerous deliberations with our consultants. We actually have contracted a number of external valuators for that, and the price was established using DCF, or discounted cash flow method, which is a very classical approach. Any issuer would look at the company when determining the price. Then we measured the company against its peers in similar industries and comparable markets. If markets are not comparable, then market discount factor is applied, and basically that's how the price was established. I think the good news is that now there are, as of today, at least a couple third-party research papers, opinions available, which in our view are kind of hinting that that from the issuer side we have taken a rather conservative approach, and we actually left some money on the table, which I subjectively tend to believe is a good thing, because we are of the view that IPO is not only about the company, it's not only about the issuer, it's also about creating the momentum and make it the share offering attractive to investor. And the best way of doing that is, of course, to leave some money on the table and to create this sort of notion within the investor community that there is some money to be made from this share issue. So that's the approach we have taken.
Investors are interested in your export markets. How much do you export to EU?
EU is our core market, and of course, it's no secret that if you would look at EU as a sort of economic area, as a region, and speak of agriculture, animal welfare biosecurity standards are the most stringent in European Union if you look globally. That's why it's actually quite difficult for European European Union producers to compete outside EU. Having said that, obviously we look at the EU market as such, due to our size and limited ability to supply large quantities of products to large international chains. We focus on the Baltics. In the previous years, historically, if I would round the numbers, historically up to 60% of our product was sold domestically, and up to 40% sold in EU. If sort of we would try to localize or narrow it down to the Baltics, because as I said, we look internally at the Baltics as a sort of domestic market, then about 70% of our products historically was sold in the Baltics.
What company will do with the old barn after retail chains will refuse to buy cage eggs?
If the market sentiment and also legislative decisions will prescribe so, of course, the old barn will have to be transformed. The good news is we have made internal calculations. We know how much this transformation will cost us. On the flip side, I think APF is already uniquely placed in terms of its competitive positioning, because already today almost 2/3 of our production capacity is cage-free, and once we complete current investment program within next year, only 1/5 of our capacity will be cage. But then now on the other side, if we look on the demand side, I mean, yes, we're all are animal welfare standard conscious, and there are these movements. But as I said also during the presentation, on the consumer side of things, you see that the consumer still demands this cheap and widely affordable product. So as long as there is demand for that, we'll obviously continue to supply that. But yes, to answer that particular question, we don't see this as being a major problem for APF in particular. If anything, I think we are very uniquely placed as compared to any other industrial egg producer, in fact, in wider Europe, because already a majority of our infrastructure is cage-free.
And what are the most important KPIs for APF?
Well, if we speak midterm and sort of look at the macro level, of course, the key KPI for the next year is to complete the investment program on time and in budget. I think we have a very good track record in doing so with our current team, because we have delivered all of the projects on budget, and even receiving some architectural awards, which is an additional bonus. But of course, it's very important to do it in a very timely manner. Now we see that our team is capable to build the new barns, put the new equipment in, and make it fully operational 10 months after starting the construction. So assuming we're gonna start the construction in November this year, we should be in a position to fully commission new barns by August, September next year. So that's one of the key critical KPIs for the management team. Now, of course, it's also important to keep our market share in the Baltics, and where possible to increase it. I think so far we have been very successful in doing that. And as any production company selling in retail, we monitor this on quarterly basis using Nielsen IQ reports, and we like the dynamics that we see. Obviously, there is no justification to relax because your competitors will not allow you to. So that's a KPI number 2, to remain and increase our market share. And KPI number 3 is actually as I've said, also the ESG part of things. We really want to deliver on that. Yes, one can argue that this is not what sort of improves your returns and dividend stream to the investors. But I mean, this is a commitment we have taken up, publicly, very loudly, and we have a dedicated team for that. So that's something we also want to report to our shareholders in the next years to come. So I would single out those 3. But of course, as any properly run company, we have KPIs in place for every management team member, myself included. They're granulated on quarterly, monthly basis. So sort of we are trying to run our organization in a very structured way.
Thank you. All questions have been answered, and we're slowly wrapping things up. The recording of the webinar will soon be available online. Therefore, please follow APF Holdings announcements to stay up to date with company's news. Participants, thank you for joining the call today.
Thank you very much, everyone, for your attention.
Thank you.
Bye-bye.